Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, before we get into market moves, let's talk about the shutdown. It's over, but there is still some impact we have to think about. What's your take?
Yeah, I would agree. I mean, obviously, as we kind of see the government reopening here, we'll get more economic data hitting the wire. Now, some of this data may not even come out. I mean, the White House is kind of talking about the October data set, especially when you're looking at CPI, as well as the employment numbers, may not even be released because of the data set obviously being, let's call it corrupted for now, or just non-existent, at least to say the least here. But we are done with the shutdown, and at least for now. The next headline when it comes to the government staying open is going to be around January 30th. That's as much as we are seeing the government being funded by this bill that was signed by President Trump yesterday. But you are seeing some optimism when it comes to the street. As you talked about, that rotational trade is still taking place, coming out of technology in some respects, going into some sectors like financials, healthcare, catching a bid, also materials. And we can kind of talk about that a little bit later here. But we are seeing an ending here. And we will probably see maybe some of these consumer staple stocks as well, just like the Walmarts or even the Costco's, Dollar Trees, Dollar Generals for that matter, actually catching a bid, because once again, those SNAP payments are going to be reinstated here, and that could actually be a tailwind for top line growth for a couple of these names. So the saga is finally over, and now we can kind of move on to the next story here, Diane. And I know that there's still going to be a lot of headlines, but at least this one is going to be put past us, at least for now.
Yeah, well, what the government said with regard to the data tracks, with a conversation I had recently with the chief economist for Goldman, who said it would be difficult to and essentially get some of that data because of the way it's collected. So I imagine it may be accurate that we don't get that October data, but at least we're in a space where we'll get November data. Let's talk about, more broadly speaking, about the broadening that we've seen in the market with the Dow powering higher. It feels like make industrials great again. What's your take?
Industrials are catching a bid here. Once again, this is kind of a little bit of a rotation trade. Also, when you were talking about the Dow, it's price weighted instead of market cap weighted. So there's certain stocks like Apple, for that matter, that could actually have a really big outsized influence on the index itself. And we are seeing it kind of power higher, making new all-time highs. Now, the Dow actually has been lagging for the better part of this year. So you are kind of seeing this, marginal outperformance, to say the least here. And when you're kind of looking at the industrial space, we obviously have had some earnings that have been announced. They have been better than the street's expectations, and you are maybe seeing some tailwinds when it comes to that lower dollar actually boosting up demand, as well as maybe some of these trade deals actually kind of coming to fruition. And then the artificial intelligence trade is now starting to reflect in some of these companies. If you look at Caterpillar, they did see a really decent spike when it came to some of their machinery sales because of artificial intelligence and building out these data centers. And so not only are you seeing kind of that technology or that OPEX spend, or CapEx spend, from technology companies kind of hitting the technology sector as well as communication services, but now it's starting to flow to sectors like utilities, sectors like industrials, and that actually could be a longer term tailwind here. I mean, we still only have about maybe a month and a half or so of this market left, and you are still seeing a significant amount of fund managers that are behind the broader index. And you have two ways to be able to try to find outperformance, Diane. You go to the names that you know, the technology sectors, the communication sectors, those have been the ones that have really been outperforming, or you look at very underloved sectors that have maybe a lot lower market cap weighting, but they could move actually fairly aggressively if positive inflows are hitting those markets. I think that's also what you are seeing right now with some of this performance with a couple of companies that have been, let's say, consolidating or beat down for the better part of this year, starting to actually wake up and move to the upside here.
Okay, all right. Let's talk about some earnings that you are across. Disney quarterly results out this morning. Looks like the stock's been flagging in the pre-market, still is. Why don't you take us through some of your takeaways here?
Yeah, we are seeing the shares down about 4%. Revenue came in at $22.46 billion. It did miss the street's expectations of $22.75 billion. And you are seeing revenue pretty much flat on a year-over-year basis. The adjusted earnings per share actually did beat the street's expectations, coming in at $1.11. Street was looking for $1.05. But the entertainment and TV and film business, for the most part, is actually where you are seeing the weakness. The revenue was down about 6% on a year-over-year basis. We have seen this dispute between ESPN as well as other networks owned by Disney and YouTube TV, which has become fairly popular. And this has actually been going on since October 31st. Now, this has not really been reflected in this report so much, but it is a little bit of a concern as to the future guidance for this company here. When you're looking at streaming and Disney plus Hulu, we did see operating income up 39% on a year-over-year basis, and parks and experiences revenue grew around 6% on a year-over-year basis. So you are still seeing some relative strength in that business unit, but once again, maybe some weakness when it comes to others, and that's why we are seeing the shares lower, once again, about 4% in pre-market trading.
Okay, and then Cisco, on the flip side, is moving higher off the back of its quarterly report card. What's your take here?
Yeah, a really decent beat, both top and bottom line. Revenue came in at $14.88 billion. Street was looking for around $14.77 billion, and the adjusted earnings per share came in at $1. Street was looking for 98 cents. When you're looking at networking, which is their largest segment, revenue came in at $7.77 billion. That's a 15% increase on a year-over-year basis, and that's because of the strong demand when it comes to AI data center build-out, as well as the networking components that Cisco is able to provide here. They also mentioned that hyperscaler AI orders totaled $1.3 billion that has been reported so far. Now, when you're looking at some of the other segments, we actually did see a miss when it came to security, a lot smaller when it comes to the revenue generation there, and the collaboration segment also did miss the street's expectations, but AI is obviously fueling this rally. They did actually upgrade their guidance, both top and bottom line, both exceeded the street's expectations as well. So they are seeing this refresh cycle taking place, not only just in their core business when it comes to the enterprise, but also when it comes to artificial intelligence, AI, networking. They are seeing some strength there, and you are seeing the shares pop once again, about 6% in pre-market trading here. This is a really solid report all around when you're looking at the major themes that the market really does care about.
Okay, all right. Let's talk about the levels on the S&P 500 that you're looking for today. We managed to hold up around that lower level that you were looking for yesterday, inches higher by the close of yesterday's session. But what are you looking for, your targets to the upside and the downside today?
Yeah, to the upside, 69.05. Once again, to the downside, 6,800. A pretty wide range to start the day. You are seeing actually some out-of-the-money put activity taking place early on in the session here, and we're implying around a 1.1% move in the S&P 500, either to the upside or downside. Keep your eye out on NVIDIA. If NVIDIA breaks 190 to the downside, I think that's probably going to be your catalyst for the broader market pulling back pretty aggressively here.
Okay. All right. Thanks a ton for the targets. As you mentioned, wide range. And I want to go back to that note you made about Caterpillar. Best performer in the Dow this year. Who knew that this would kind of be an AI play there, too, as well? All right. Thank you, KG. That's our Kevin Green, Senior Markets Correspondent.